What's going on, guys? Are you self employed? Do you own a business and you're worried about qualifying for a home loan? Well, in this episode, we're going to talk about the unique challenges that self employed people may have when trying to apply for a mortgage. What's up, guys? It's Teach Me Tuesday. Wilmar here with the Bear Group, and I have the lovely team right above me. I'm going to let them introduce themselves.
Yeah, Team Abraham, LaShawn Abraham here, Somerville, South Carolina, serving all of our clients in the Low Country and Southeast Coast between North Carolina and Georgia as well.
Yep, Gavin Abraham, all the same things. Let's get going.
Let's get to it, guys. So, guys, I have some clients sometimes, right? And they're business owners, they're self-employed. Well, first, let's talk about that. What is self-employed? Let's talk about that first. So we make sure there's a clean slate starting off in the beginning. What is self-employed?
I love that question because I do think that there is a difference of someone that's self-employed versus a business owner. A lot of
Mm,
people like to use those terms interchangeably, but they're truly are two different type of people.
Mm-hmm.
right,
Because you
right.
have, like, think about it. You have anybody can be self-employed, right? If you
Mm-hmm.
have a hobby that you do on the side or something that you kind of just do for extra income, or maybe you're like a freelancer or a contractor, independent contractor, something like that, then technically you're really just self-employed. You kind of work for yourself. But when
Mm,
you're a business owner, right, whether you have a brick and mortar or not, typically that can include employees or not, but you kind of run things a little bit different. You file taxes a little bit differently sometimes too. So there is a little bit of a distinction there. But in general, under the mortgage umbrella, we kind of treat self employed individuals and small business owners kind of like one and the same. The biggest thing is going to be that you're not getting a W 2. So, really, in our world, if you're not receiving a W 2, then you're self-employed. If you're getting a 1099, or if that income is coming strictly from either some kind of cash business that you're doing, or you're being paid from not from an employer, then technically you're self-employed.
cool. So I guess, well, why are and you probably answered this already, but just want to be clear to the audience out there. Why are self-employed, buyers more scrutinized than others?
That's a good one.
Yeah. I mean, well, self-employed buyers have more. They have to show. They have to prove their income.
Mm,
It's easier for a W-2 employee to say, "Hey, this is the money I make. Here's my W-2 that tells you that, or here's my
right.
pay stubs that show the frequency in which I get paid." However,
Mm,
business owners, man, it can fluctuate by season. Um, you know, sometimes you have a um, higher years than others. It depends on what your business is based on. Because if I'm in the restoration business, like for homes or something, my business is going to be a lot more busier after a hurricane in South Carolina or after a natural disaster. But if I'm a painter, you know, my business can be consistent, all year round. Or if I provide a service such as, like, food delivery or whatever it may be, or transportation, things that are always needed, and they don't really fluctuate in demand. Um, you know, it's easier for me to provide um, stability in my income. But yeah, but the main thing with self-employed people, why are they scrutinized so much, is because they have to have they're responsible for their own record keeping. They're responsible for their what they report to show as income, and all the good things that they get to write off, which are benefactors in certain aspects of take getting tax breaks and things of that sort. But when it comes to getting a mortgage, we need to see that the highest number
hmm
of what you're seeing that you net.
hmm
Um, so that's
Yeah,
So,
I
I
mean,
think that's the heaviest
mhm,
scrutiny. Go ahead, LaShawn.
okay.
You want to add to that?
yeah, the only thing I was going to add to that is, honestly, the simplest way to put it is it has to do with your taxable income. That's really what it all boils down to, is what piece is Uncle Sam getting, kind of has the biggest control over everything. So when you think about a W-2 employee, right, their taxes are taken out up front before that person gets their paycheck. They have all these different itemizations of everyone that kind of gets their funds. When you're self-employed, the beauty of that is you get paid directly. So whatever you make, and on the back end, you pay and write off whatever expenses you may have. And so your taxable income is different when you're self-employed versus when you are a W-2 employee. So it makes a big difference, and they're scrutinized because an underwriter or, different federal government agencies, they want to verify and validate the truth and worthiness of the things that are being written out. Because to be honest, people try to get tax breaks, and they do some things that may not necessarily be on the up and up. So they are scrutinized a lot heavier because of that.
Gotcha. So what I'm getting is y'all need to see what's consistent, right? What's
Yeah.
consistent? What are you really making,
Yeah.
right? And so that y'all have show some stability with that particular buyer. If I get that right.
You got it.
Okay. All right. So what are some of the things that, certain lenders look for when it comes to what documents are they looking for, so that, documents, or what kind of qualifications are they looking for a self-employed buyer?
Yeah. So go ahead, Gavin.
No, you got it. Go ahead.
Okay, so I was gonna say, yeah. So when you think about once again, we talk about the riskiness, why self-employed people may be scrutinized a lot heavier than your typical W-2 salary, hourly, paid employee, is that we look for one, have you filed taxes? So tax returns are key whenever you're trying to get a mortgage loan and you're self-employed. If you haven't filed taxes, unless you're going to buy that house in cash, then you're not going to be able to do a loan. That's just kind of just the the moral to the story here. You have to file taxes. Usually they want 2 years of tax returns. However, that's not always the case. As time has evolved, there's so many different types of loans out there where we can kind of either work around the tax returns, maybe only get 1 year, and sometimes we can do loans where we don't need tax returns at all. But in general, for the typical self-employed loan, we need 2 years. Outside of that, because of that level of risk, you generally have to have decent credit as well. Because when I say decent credit, usually around that 620 mark is kind of the rule of thumb for most self-employed people. Not saying that we can't do it if it's below a 620, because we can still offer FHA or VA and things like that too. But really a 620 is kind of like the benchmark of what we're kind of looking for there.
So with the 620, let's talk about that, because is it an aggregate 620, or is it like the lower score 620? Because I know sometimes it's different with different things. So can you go in more detail with that?
Yeah, I mean, we're looking at your middle FICO score.
The middle. Okay.
Yeah.
Gotcha.
So you get these 3 credit bureaus, TransUnion, Equifax, and
Experience.
There we go. Yeah, you're right there. TransUnion, Equifax, and Experian. So between the 3, and just not everyone has 3 credit scores. But in a general sense, when you do have all 3 credit scores reporting, we're not going to take your lowest score. We're not going to take your highest score. We're going to take whatever's in the middle, and that's going to be your qualifying FICO score. If for some reason you only have 2 scores reporting, for some reason like you don't have enough credit history, multiple programs, they will still allow us to qualify you based off of 1 or even 2 scores reporting. But again, it's never going to be the highest score. It's just going to be whatever the lowest score is. So I mean, that's in regards to, I think that was the question. The question was, how
about that credit score. Okay, well, cool, man. So, what documents you need to provide? I think you mentioned the tax returns. What other documents someone is going to need to provide as a self-employed buyer?
Well, yeah, I mean, again, tax returns, of course. Most times, the most recent 2 years, as Sean said earlier, 1099s for those who are like contractors or being that don't own aren't like 100% owner of their business. They're a business, but they're contracted through someone else, so they get paid a 1099. And we also need like bank statements. We need to show that you have assets, that the money that you're receiving, we're seeing deposits to show that you have some kind of business banking set up to show that you're operating as a business. And then also for most cases, a year-to-date profit and loss statement. When you file your taxes, you typically come up with a P&L, profit and loss statement, as a business owner to submit to your tax professional or whoever does your taxes, and that gives the story of how your business did for the year, um, all the profits that you made, the cash and the money that you received, and all the debts that went out, the money that went out of the business, or whatever losses you may have taken or expenses. And so if we're almost like right now, we're just hitting the end of today is the tax deadline in
Mm-hmm.
most states. I know we got a little. I just heard on the news this morning we got a little extension
I know
because
because of hurricane.
of the hurricane.
Helene.
So I think the beginning of May is actually the tax deadline for federal taxes here in South Carolina, if I'm not mistaken. But consult your local Google to find out your actual tax deadline.
Gotcha.
But yeah, I mean that's
I got you.
having that P&L is important to see where your business is going year to date.
Right. And it's important. So let me touch on this. It's important, guys, if you're out there self-employed, you want to buy a home, you need to start planning for that when it's time to do your taxes. Okay. If you're planning to buy a home next year, guys, you need to talk to your accountant about that as well. Because if you're gonna go as you normally do, and hey, you want to file a loss or whatever, uh, it's going to hurt you when it's time to get that approval, because it's not going to show what the lender needs to see in order for you to get approved for the home that you desire. Okay, so that's so important. You need to make sure you talk with a lender, then, and also talk with your accountant about that, so that they can make sure you're on the right track. You probably gonna have to pay some money, guys, to Uncle Sam, in order to show that you made some money from your business, so that they show that you are profitable on your P&L. But you definitely, that is going to put you in the right situation and path to home ownership. So just want to touch on that, because I know I run into that a lot with some of my clients, and I just want to make sure you guys are prepared, especially since it's tax season. Or if you haven't filed yet, you filed the extension. Make sure you have that talk with your accountant.
Yeah,
Um,
but I'm gonna
mhm,
add to that too, because I think what you said was so important, because
mhm,
when you're self-employed
right.
versus a W-2 employee, you follow a completely different path than your typical
Mhm,
buyer, right? Which is one of the reasons why we decided to kind of talk on this subject a little bit as well, is because you need to know that it's not what you're doing today, is what you have already did, a
mm,
year or two ago, because we're looking
right.
at your previous years and your profit and loss so far year to date. And so we
Mhm.
all of that stuff has to be in alignment, because too many times what I see is I have a person who may have, wrote off all their money in 2023, showed some money in 2024, but then their profit and loss shows something completely different. So all of
Mm,
their numbers are kind of inconsistent, and it kind of
mm,
shows that, is your business stable? Is your business really making money? We don't
yeah.
know, because there's not a consistency of the profits that your business is making. So you want
Right.
to definitely make sure that you're reporting consecutively a profit at least 2 years back to back, not just for 1 year, but for definitely 2 years at least back to back.
Wow. That's so good, guys. So,
Mhm.
all right, let's say they get approved. All right, we got that part out the way. What are kind of like a down payment they might be looking at? What kind of down payment that self-employed buyer might be looking at on a house? What percentage of the home are they looking to probably put down once they're approved?
Yeah, so what I would say to answer that question, to be honest with you, even though one of the good things, even though you're self-employed, you still kind of can qualify like your typical regular
Mm,
W-2 buyer. So you can
okay.
still get first-time home buyer programs, you can still get down payment assistance and things like that. You can still use a VA loan or USDA loan. There's no differentiation there when it comes to, because you're self-employed versus W-2, what type of loan you can get. Where the difference kind of come to play is, one, if you make too much money, because sometimes some of those programs do have income caps, where you can't make over a certain income based on the county that you're trying to buy. Or two, if you have a hefty tax liability, if you owe
Mm.
a lot of money to the IRS, then that can kind of impact what program you can do. But in general, you can get away with zero down or put down as much as 10 to 20%. It just kind of depends on where you fall.
Awesome. Well, guys, we're gonna wrap it up. We coming up on the end of our time. Some
Went by
final
quick.
tips that we have is plan 6 to 12 months ahead if possible. Keep clean, update financial records. Don't move money around right before applying. And most
Yes.
importantly, you can get approved, guys. So
Yes.
hey guys, tune in again as like we always do on Tuesdays. We Teach Me Tuesdays every Tuesday around this time of the day, you know.
12,
Uh
12
yeah,
to 12:30-ish.
ish, so we again always enjoy serving you guys, and we look forward to the next one. Have a great week and be blessed.
Peace.
Thanks, y'all. Bye.